Welcome back to our podcast. Today, we're diving into a shocking statistic. 90% of traders lose money. But here's the twist. It's not because the market is rigged. It's because they're playing the wrong game.
That's right. It sounds insane, but it's true. Many people enter trading thinking it's a shortcut to wealth. But in reality, it's one of the hardest performance-based professions out there.
So, what do you think is the biggest mistake beginners make when they start trading?
Great question. The biggest mistake is thinking trading is about predicting the market. It's not. It's all about managing risk. The market is inherently uncertain, and no one can predict what will happen next.
That makes sense. If it's not about prediction, then what actually separates the successful traders from the ones who fail?
It really comes down to discipline and risk control. A profitable trader can be wrong 50%, even 60% of the time, and still make money. As long as when they win bigger than they lose.
So, it's more about math than magic?
Exactly. Think of it like a casino. They don't win every game, but they always have an edge. Traders need to adopt that same mindset.
Okay, but if the rules are somewhat simple, why do most people still fail?
Simple doesn't mean easy. The real enemy is emotion, fear, greed, impatience. Many people overtrade, revenge trade, and risk too much on a single position.
Let's break that down a bit. What exactly is revenge trading?
Revenge trading is when someone loses a trade and immediately jumps back in to try to win it back. It's impulsive and usually leads to even bigger losses.
So, it's similar to gambling behavior?
Absolutely. Many people are essentially gambling while calling it trading.
How can someone tell if they're trading or gambling?
That's a good question. Ask yourself, do you have a defined strategy? Do you know your risk per trade? Do you have rules for entry and exit? If you answer no to any of these, you're probably gambling.
That's pretty blunt, but fair.
It needs to be blunt. The market doesn't care about your feelings.
What about social media? A lot of traders online showcase insane profits. Does that influence the problem?
Massively. Social media creates unrealistic expectations. People see someone turning $1,000 into $10,000 and think that's normal. What they don't see are the losses or the luck involved.
So, people are chasing fast money?
Yes, and that's the trap. The moment you try to get rich quickly, you start taking excessive risks, and that's how accounts blow up.
If someone wants to avoid being part of that 90%, what should they focus on first?
3 things. 1. Risk management. 2. Consistency. 3. Psychology.
Let's break those down one by one. Starting with risk management, what does that look like in practice?
Never risk more than 1 to 2% of your account on a single trade. That way, even if you have multiple losses in a row, you're still in the game.
That sounds slow.
It is, and that's why most people don't do it. But slow is sustainable.
What about consistency?
You need a repeatable strategy. Many traders fail because they switch strategies too often. They lose a bit and jump to something new without giving anything time to work.
So they're never in execution mode.
Exactly, they're always in search mode.
And psychology, this one seems the hardest.
It is, because it's internal. You have to learn to deal with uncertainty, accept losses, and not let emotions dictate your decisions.
How do you actually train that?
Journaling can be very helpful. After every trade, write down why you entered, what you felt, and what you did right or wrong. Over time, patterns will emerge.
That sounds like self-therapy.
In a way, it is. Trading forces you to confront your own behavior.
Let me ask something controversial. Can anyone become a profitable trader?
Honestly, no.
Really?
Because not everyone is willing to do what it takes. It requires patience, discipline, and emotional control, traits that many people struggle with.
So it's less about intelligence and more about behavior?
100%. Some of the smartest people fail because they overthink or overtrade.
What about indicators and strategies? Are they overrated?
They're tools, not solutions. The right indicator won't make you profitable if you have poor risk management or emotional trading.
So the edge isn't found in the indicator.
The edge is in execution.
That's a powerful line.
And it's true. Two traders can use the same strategy. One profits, the other loses, because one follows the rules and the other doesn't.
Let's talk about losses. How should a trader view losses?
As a cost of doing business, just like rent, you don't get emotional about paying rent, you accept it. Losses should feel the same.
But emotionally, that's tough.
It is, and that's why many people fail.
What's one mindset shift that can instantly improve a trader?
Stop focusing on making money. Focus on executing your process correctly. Money is just a byproduct.
So, process over outcome.
Always.
If you had to give one final piece of advice for anyone wanting to succeed in trading, what would it be?
Treat trading like a business, not a lottery ticket. If you approach it seriously, with structure, discipline, and patience, you give yourself a chance. Otherwise, you're just part of that 90%.
That was intense, but incredibly eye-opening.
That's the reality of trading.
And maybe that's exactly what people need to hear. As we wrap up, remember, most traders are chasing profits, but the real game is mastering yourself. If you enjoyed this episode, please subscribe for more insights and let us know in the comments what topics you want us to cover next.